Without further ado, though, we're going to get right into our next session. I believe this is the first time that we have seen a panel in this industry with the entrepreneurs and leaders associated with the three largest stablecoins, or because we'd like to call them from now on crypto dollars. There's been an absolute explosion in crypto dollars over the course of the last year. We're now up to over 10 billion in combined market cap. And we have Paolo Arduino from Bitfinex and Tether, the largest and oldest stablecoin, Chad Cascarilla, who's the founder and CEO of Paxos, and Jeremy Allaire at Circle. Of course, one of the leaders with Coinbase in bringing forth the USDC currency through their association center. Without further ado, I'm going to drop off and let Jeff Roberts from Fortune, who has an excellent new book coming out that I'll make sure we drop in the chat so people can pre-enroll and make sure that they get a copy of it. He's going to take it away and drive this discussion on how do we get from 10 billion to 100 billion and what does it mean for the broader crypto asset space.
Welcome, everyone. Good to be here. Good morning. I'm Jeff Roberts from Fortune. I'm excited to be hosting a Cambrian explosion of crypto dollars. Yes, this is the stablecoin panel. We'll be exploring how stablecoins are changing crypto, central banking, and the future of money. I'd like to just jump right into it. So I'm going to flip it to our panelists to introduce themselves. 1 minute, say who you are and why your stablecoin's the best. Jeremy, you want to kick us off?
Sure. I'm Jeremy Allaire, co-founder and CEO of Circle. We operate platform services around stablecoins, provide a variety of different services, but the core stablecoin that we introduced with Coinbase in 2018 through the Center Consortium is US dollar coin. And the approach that we took was a little bit unique in that what we've tried to do is build a consortium model that is member governed and that will ultimately allow for potentially hundreds of different issuers of the stablecoin. It's a self-regulatory model, so the members of the consortium must be regulated financial institutions in good standing under U.S. regulatory law. There's a top tier money center U.S. dollar bank that holds reserves, a top tier global financial firm. Financial accounting firm that attests to the reserves, and there's great liquidity and connectivity to banking rails, wire rails that are readily accessible to both individual at the retail and institutional level. So that's the high level on it. It's something that's grown a lot in the last couple of years, and there's a lot of ecosystem support around it.
Great, thanks, Jeremy. Paolo, put it to you. You want to make the case for your stable dollar?
Sure. I'm Paolo Arduino, CTO at Tether. Tether has been the first stablecoin around since 2014. It grew a lot, especially starting from 2017. It was possibly the only one that was started to be adopted by many of the existing crypto exchanges, and all the new crypto exchanges were definitely using Tether as their base pair. So in 2018, it kept growing throughout the entire 2019, and 2020 had an additional boom. So I think that Tether is the key when it comes to both liquidity and presence across all the crypto exchanges and all the major crypto blockchains.
Great. And Chad, welcome. You want to introduce yourself and make the case for Paxos' stablecoin?
Sure. Maybe I'd say make the case for stable coins, Paxos stable coins, plural. So what's unique about Paxos is that we're a regulated financial institution. So that's very unique. And on top of that, our stable coins are regulated. So not only do we have our own stable coin, which is Pax, we've allowed other companies to be able to issue their own stablecoin that's regulated, like what Binance has done, and Hopely has also created a stablecoin as well. And there'll be other issuers that use the infrastructure that we've created to build stablecoins that are regulated. And so the key thing I think about what we're doing here is creating the capacity for a stablecoin to exist that's fully backed one for one, that's bankruptcy proof because it's held in a trust company that's fully regulated and fully segregated funds. and because it's regulated, to be able to really start to gain broad adoption. And I think at the end of the day, when we think about stablecoins, what's so exciting is not just what it can do for the crypto community, which is, I think, obviously shown itself to be very important, but what it can do very, very broadly across the scale of traditional financial markets as well. And in order for that to happen, I think you need to have a process of being regulated, and you need to have a regulated infrastructure that others can use.
Yeah, that's an interesting point on regulation, because sort of as someone, as a reporter, a bit of a distance from these things, I always wonder what exactly is under the hood. You know, Tether's, and I'll probably come to you on this, Paolo, but I'd like to put it to you, Jeremy. How do we know what's really under the hood of a stablecoin? We've seen the headlines about Tether and other things. You know, how does anyone know these things are in fact backed by what they say they are, and what's the optimal process for auditing them?
Yeah, I mean, there are a lot of pieces to this, and I think this is going to evolve a lot over the next couple of years as the Financial Stability Board introduces comprehensive regulations on global stablecoins that get implemented in the G20, over the next 2 years. So I think we're going from early jurisdictions who are sort of taking a high-level approach to this. But, the bottom line is, the first is, is the issue a regulated financial institution that is bound by certain fiduciary obligations that come along with that? So if you're storing value on behalf of customers, whether you're a payments institution or a banking institution, what are you allowed to do with funds? And that's by law. Like, you go to jail if you violate that, for example. So, Circle and Coinbase are both regulated financial institutions, and we are bound by and examined by regulators on a constant basis. So we have government regulators from the US and Europe who are examining us, examining all of the, not just the accounting of customer funds, but also the funds flows for financial crimes and things like that. So that's one. And then the second is, in particular, the particular stablecoin arrangement. This is a new kind of arena, has a reserve function. And the question is, what is that reserve function? How is it managed? How is it governed? What's the visibility that the market has into that? And I think that matters a lot as well. So in the case of Center, USDC, et cetera, the first is that the reserve funds are bound by what we're allowed to do as financial institutions. So we can't go outside of that. There's what are called permissible investment permissible investment rules. And then the second is just the public attestations. So I think, we took the approach of working with a top 5 global accounting firm, Grant Thornton, to do monthly attestations, to look in detail at the actual reserves, the reserves that are held in a top tier money center bank in the U.S., and ensure that they are meeting both the investment policy that has been established and governed by Center, as well as the actual accounting. And attest to that publicly every month. I think we'll get to a place over time when people understand exactly what these are. Potentially in the next 2 years, these will be Fed accounts, not just commercial assets. As central banks step into this as well, we fully intend to work with the leading central banks on those kind of schemes as well.
Paolo, I want to put you on the spot here, if only because Tether's been in the press a lot. I know some of the studies are sort of dubious and have been sort of debunked, but still there's a question of what is under the hood of Tether. And can you say unequivocally that it's backed by a one-to-one reserve? And can you explain how people can verify that's the case?
So Tether is backed one-to-one by reserves, and it's also registered one with FinCEN, and works globally with regulators, with law enforcement, with the anti-money laundering parts of law enforcement on a daily basis. As I think Jeremy said, if you are in this business and if you do something wrong, you don't last long, right? So we believe that our approach to stablecoin is strong. We are getting rewarded by the community. Of course, there were press headlines. I'm not here to comment much on those. I'm also not the lawyer of the company, but I think that we are a strong business. We grew this entire space, and the communities and the crypto industry is keeping us flying really high. I think that what we did, also the way we approached law enforcement regulators, also helping them, teaching them how this space works, is really giving us a big reward in terms of respect. I think that we were able to prove that Tether is pure legitimate business, and there is nothing to fear about.
And Chad, I'm not necessarily trying to stir the pot here, but Paxos, in reaching out to reporters regularly, stresses how it's audited and regulated, and implicitly suggests it sort of might be a more secure option than some other stablecoins out there. Are you confident in what Paolo says, that Tether is indeed a soundly regulated product and one-to-one backed?
Well, I'd say there's a couple elements to this. The first thing is, I think what we're doing at Paxos is fundamentally different because our stablecoin is itself regulated. So we have a primary regulator of Paxos and of the token itself. And so the issuance itself is regulated. That's different. And it's different in a way that allows it to scale. So we're having conversations with banks that want to issue stablecoins, payment institutions. You're really talking about potentially tens of millions, hundreds of millions of consumers that can be brought into the crypto space through the utility of having a well-constructed stablecoin. That's what we're trying to create. That's what we think our model enables. And I think that's very unique. So I think Tether's obviously been able to grow and, clearly has the largest market cap right now. And it's been able to do that because, for instance, being there first has a certain advantage. It has a trusted place with consumers. But on the other hand, we're trying to think about how do you go from just being in the crypto space to something that is changing really the entire nature of the financial system. And that's a completely different leap. Having $10 billion of total crypto that's been tokenized is great. But when we look at it, we think there's $60 trillion of US dollars that exist. It depends on how you want to measure it. That's an enormous market opportunity. And there's no way something of that scale is going to migrate over unless there is the right level of regulatory oversight and trust that can be established so that you can then get large institutions and the massive consumers to switch.
Yeah, if you don't mind, I wanted to jump in. I think one of the themes here is like, obviously, like there have been interesting milestones recently where stablecoins are like the majority of transaction volume on public chains, in particular on the Ethereum mainnet, and that's sort of stablecoins are the killer app of blockchains, if you want to sort of say. It's pretty definitive at this point. But like to echo a little bit as well, what's being said is like we're in the really early days of this. And Jeff, as you know, we were passionate about the idea of how do you take central bank money, reserve currencies, and be able to have that function as a digital currency over public blockchains. It's really only become technically feasible in a meaningful way in recent years. And we're really on the cusp of technologies, third generation blockchains, scaling techniques that are going to make this viable on a mass scale for hundreds of millions or billions of people. And, this is the early days. I think we're going to look back. This is like, streaming video in 2004 or, pick your point of time with an internet technology. The next 5 to 10 years, I think we're looking at moving into trillions of dollars that are tokenized and function as digital currency. And I do agree also that the regulatory schemes are going to be critical. If people are going to depend on that, businesses are going to depend on that, consumers are going to depend on that and storing value in it. If it's actually playing a role as a market infrastructure that financial contracts are built on top of, there's a whole set of things that have to happen for that to be the case. But this is super early, and the sort of market cap numbers are sort of interesting, but they're all pretty much a proxy to how actively these things are being used in crypto trading markets today. I think the inflection point is what happens over the next several years as this moves to what's being used more broadly in payments and settlement.
I do want to get to the broader and fascinating world of the potential and the future of stablecoins, but I do want to just finish up what we're talking about here on Tether, because Chad, you sort of didn't really answer the question. So I'll put it to both you and Jeremy, simple yes or no. Is Tether a soundly regulated product that consumers can trust?
I think it's not a regulated product. I mean, there is no regulator of it.
Jeremy?
So I'm not a legal and regulatory expert on this. I do not actually know what the registrations are or the licensing that the Tether institution has. So I actually don't know the answer to that at this point.
And Paolo, I just want to make sure I'm being fair here. Do you want to reassert that it is a soundly regulated product that consumers can trust?
So consumers can trust it. I think that, of course, again, I'm not either the CFO, CEO, or General Counsel of Tether. If I'm not wrong, Tether is registered with FinCEN and is regulated under BVI law. So that is much of what I can say. But of course, we welcome regulations. We, as I stated before, we work with many regulators around the world, almost in any country, I would say. We help many businesses to fight for security issues they had because of their system. And as Tether, we have strong policies in order to protect the customers. We use chain analysis to ensure that our stablecoin is used in the proper way. We are doing, I think, wonders when it comes to either security and safety of our stablecoin. So when it comes to specific regulatory matters, we have a CCO, we have a general counsel. That is what I can say. I think that you don't become anyway the leading stablecoin. I believe, as the other said, in this moment, of course, the future will see, right? There is a tremendous potential for stablecoins to grow to trillions. And I believe that Tether has a shot to reach that level. We will adjust and we will do whatever it takes in order to make our audience and customers comfortable. And we will respect any requirements, regulations, wherever we decide to operate. So I believe that it's fair to say that Tether is something that people can put trust in.
I appreciate that. And I think you make a good point that traders and consumers continue to vote for their wallet for Tether, regardless of the headlines. It's still by far and away the most popular stablecoin. And that brings up a question I'd like to explore a little more. I'm going to toss this one to you, Chad. As a reporter, I'm surprised how many stablecoins there are out there. I mean, there's dozens of them, and I see the appeal in creating them. But, is this a winner-take-all market? Is there room for dozens? Is there room for 3? Just take us into the future a bit on, how many stablecoins there will be in 2025. And I'm speaking about US dollar stablecoins to keep it simple.
Yeah, well, I mean, 5 years is a long time. I certainly don't think all of us will be around in 5 years. I really don't. And I think I think having licensing is a helpful level of oversight, but it's not the same thing as being regulated. And I think ultimately what's going to allow these trillions of dollars to migrate and billions of consumers to migrate at scale is going to be about regulation. And if you look at what happened with Facebook and Libra, we saw someone that had the potential to launch of some type of stablecoin at scale, and immediately, between the political economics of what was going on and the regulatory oversight of what would be needed, it immediately became clear that there had to be regulation, and that was, I think, a clear takeaway from their move into the space of stablecoins. And so I just can't imagine that in 5 years, if we're really talking about how you've transformed the financial markets, how you've transformed the financial system by having dollars on a blockchain, that won't involve the right type of regulatory oversight to give that level of confidence. And so I don't think that there's going to be, 25 or 30 or 50 stablecoins. There's just not a need for that. But I do think that there is a need to have more than one. There's more than one currency. There's more than one type of payment mechanism. There are prepaid cards or credit cards. There's cash. There's all kinds of different mechanisms that people use today to move value around. It's not going to only be one, but I do think it's going to be, there'll be a big change from where we're at today, which is maybe the first inning. I agree with Jeremy on that. To 5 years from now, I think things could move very quickly. And so inevitably, as you go from an early stage to a later stage, things shake out. Not everyone's around.
Jeremy, in 5 years, how many stable coins will there be?
Yeah, I mean, my expectation is that you're going to see, obviously you're going to see growth in stablecoins by other currencies as well. I think in sort of dollar-priced trading markets, having everything pretty much in dollars makes a lot of sense. But we're very, very focused on how does this move into payments and settlement more broadly. If I'm using stablecoins to transact for a cup of coffee, and I live in Germany, I'm not going to transact that in a dollar stablecoin. I'm going to transact that in a euro stablecoin. I think you're going to see global reserve currencies as stablecoins, obviously competing internationally in a lot of different ways. So I think you're going to see a growth in the number of, at a minimum G20 and probably far more stablecoins. Some of those public-private partnerships with central banks, some of those purely private arrangements built on consortium like Center. But then within the US dollar space, I think it's going to end up being kind of a power law curve. I think like in other segments, I think you're going to see very likely, 70, 80% around a particular standard. And I think this is a really key concept, which is there's, viewing a stable coin as a sort of asset in and of itself. And then there's sort of the stablecoin protocols as open standards that people can implement. And I think, in the world of the internet, if every online content creator created their own protocol for how you got to their content, you'd be living in a world of all these walled gardens, like the original internet. You had AOL was a walled garden, and MSN was a walled garden, and there were all these online services that you couldn't connect to. You had to have a subscription to one of those. I think standards like HTTP made it possible for everyone to connect and exchange information with each other. Standards like RTMP make it possible for everyone to connect and stream their video with each other. I've worked on those kinds of web standards for 30 years, and I think stablecoin standards are really, really key. Everyone's going to want interoperability, fungibility. They're going to want a consistent set of interop between digital wallets around the world. And so I think standardization is going to lead to sort of a fewer number. And I think if you look at these as more like protocols as opposed to assets, you'll see that that's sort of the inevitable path that they're on. So my expectation in 5 years is that there will probably be a handful, but I would guess that maybe the top three will account for 95+% of the market share.
Do you want to say what those top three might be?
I expect USDC to be one of those.
Fair enough. Paolo, I want to toss it to you as sort of a pioneer in this space. I think what Chad was raising about Facebook and Libra was interesting. Do you worry that you and your competitors here might be edged out by the likes of not just Facebook, but it's hard not to think that Amazon and Apple are looking at this very closely. They've got customer base of billions. They can easily turn on a bank if they want to. So, do you think there's a risk that, you pioneers are going to get muscled out by the big tech companies down the road?
This is a really good question. So we all follow Libra and Facebook, and my impression is that they try to create a basket of currencies that led to many countries, at least 4 or 5 different countries, to be quite worried about the fact that Facebook, being a really powerful entity, could create, give too much control to Facebook when issuing a stable coin with that was holding a basket of their currencies. So that was the mistake that Facebook made. I believe that definitely Facebook doesn't even need probably a stable coin. They can use an underlying bank. They can issue a credit card. They can have on database payment system. I think that they are launching Facebook Pay. Google has Google Pay. Apple has Apple Pay. So everyone has already a solution. They don't need to have a stable coin. It's just basically they are running an omnibus account on behalf of their customers, and they are settling transactions directly. So that is fine. Of course, I believe that each one of them can easily overcome the market caps of the 3 stable coins that are here on this panel. At the same time, I believe that they are in that scenario will be even. And if you can think also to governments that can issue their own stablecoins. Like if US decides to go with the digital dollar, we are talking about trillions and trillions of dollars, right? So Tether doesn't expect to be to replace the US dollar completely, right? So we have our own niche. We want to work with we want to work in the crypto ecosystem. We want to offer a viable and liquid solution to applications that are rising in our industry. So this is our goal. We never meant to be the next Google, next Facebook in terms of payments. We are trying a different approach because we know that we won't last long if we are competing with them. But we have our hedge technologically. So we issue on different chains. We are leveraging, for example, Lightning Network, and we are on. Today we announced the support of OMG/Plasma. So the technological advancements that we can make, I think that the three of us is really important. It is our edge against competition, even from government. So the pace of governments and
for a sec there, Paul. I think that's really helpful.
Sorry.
I don't know. It's fine. Very interesting. And also, it's a treat to get to speak with people who know this subject so well. Just to add, I know there's a lot in the audience, too, who really know their crypto. So if anyone has questions, please submit them, and Ryan will feed them to me to relay. So, but what you were touching on, Paula, about the broader world of where it's all going, I think it's interesting what Paxos is doing with tokenizing precious metals and things like that. And Chad, I'm kind of curious, what's going to take off next after national currencies in the products you've put out so far? Is there anything that's got some real traction, or what you think is going to be the next kind of breakout stablecoin?
Yeah, I mean, I think there's a couple ways to think about this. Ultimately, at least I personally believe most assets are going to end up on a blockchain. And there's about $600 trillion of assets in the world. I think there will be a clear adoption curve of assets ending up on chain. And the real question is, how does that happen? And in what order is that adoption happening? And so we think gold is a perfect example of something that can be tokenized, that is a store of value. It's historically been money. You'd like to be able to use it like a bearer instrument. You want to be able to move it around without having to carry it. And now you actually can, because by putting a tokenized form, you can actually spend real gold that you own that's still sitting in a vault, and you own the bearer instrument legally. So that's very interesting. You can do this with other precious metals. You can do this with other commodities. We're starting to do it with stocks. We've done it by putting U.S. equities on a blockchain, and we're settling those for like Credit Suisse and SocGen. And I think there's going to be a whole number of other firms that will begin to want to put their assets on chain to be able to move them around, because it's just a much more seamless way to be able to save costs, save capital, save expenses. And so I think gold is a very, very logical asset to put on because it's used as money. There's a lot of stock of it. Yet at the same time, it's used in an industrial flow. It's a perfect crossover asset to, I think, show the value of blockchain, just like the use case of putting dollars on a blockchain has been. And so I think gold is on there. Interesting, euros haven't gotten that much adoption yet. And that's, I think, because you're still caught in the crypto early adopter stage of use of most of these assets. Getting it out into the broader world will be about bringing more of these assets on chain.
Yeah, Chad, thanks. So I think, gold you're pointing to, and I agree, that's a very logical thing. We've got about 10 minutes. I really want to get to central banking. And Jeremy, I know you talk to central bankers, and I'd like you to take us inside that process a bit. And I'd like to know, will they build it their own, or will they be reaching out to guys like you and Paulo and Chad to help build it? And secondly, what about the surveillance feature? I mean, because what China's doing scares the hell out of me, and I think a lot of people. I don't want my every dollar spent to be tracked by a central government. So it's a bit of a two-barreled question. How is it going to develop? And can they build it in such a way that it's not a threat to our freedom?
Yeah, sure. I can take a crack at that. I mean, so we've been chatting with central bank leaders for a number of years, and I've always felt very strongly that for digital currency based on reserve currencies to gain really broad global reach and adoption, that ultimately you're going to need effectively new forms of licensing and charters that are specific to the types of financial institutions that kind of mint and issue digital currency stablecoins, and that ultimately you were going to want to see kind of public sector, private sector collaboration. It's important to put into perspective. When electronic money emerged, it wasn't that central banks went and built systems for electronic money. If you take Visa as an example, as an association of banks who had developed technology for using mag stripes and plastic cards to effectively represent IOUs between each other, and that was electronic money. So electronic money was created through a consortium of financial institution players. The international wire system, the messaging standards that we think of when we wire money, that is another form of electronic money. That isn't run by central banks. It's run by an association of members as well. So electronic money exists through these public sector, private sector collaborations. Central banks care about their ability to affect monetary policy, transmit that monetary policy, set interest rates, obviously act as a lender and a backstop, and certainly other functions. They do have some role in the payment system, but broadly, I think it's pretty well understood that the private sector in technology-driven arenas is just dramatically stronger at moving innovation forward, and that's been the case in the financial sector as well since all those phenomenon have existed many years ago. And so I think certainly in the West and in many markets in the East as well, I think you're going to see this what are often referred to as hybrid central bank digital currency models, where effectively the central bank says, we're going to authorize digital currency units, and we're going to authorize certain firms to be able to issue those. And there's going to be governance frameworks around those. And those may be self-regulatory membership schemes that govern those, just like other forms of electronic money. But that the central banks themselves aren't going to step in and run all of that.
Jeremy, I just have to cut you off there at the 5-minute warning, but very quickly, the privacy implications. Can we build it without endangering our privacy?
And these are all choices that can be made, right? So I think, the power of digital cash is that it's cash and it's digital. It has a bearer instrument quality. If you have digital cash that can exist on the internet, that's incredibly powerful. The ability for programmable money to exist with these digital bearer instruments is a really radical innovation that the world hasn't ever seen and taken advantage of. And so I think we want the power of that to exist. We want the power of creativity and technical engineers and other people coming up with ideas to be able to automate all that. But there is going to be this downstream set of financial crimes and privacy considerations. And I think the key is finding a balance, and I think we can. I think we can find a balance where this can exist in a pseudonymous way, but that the controls exist and record keeping exists so that law enforcement can do their job as well. Let's
hope so. Let's program the privacy. Guys, we're almost out of time. I've got some great audience questions here. One is about negative interest rates. We saw even the UK is flirting with that, just not just Europe, but seems to be the era we live in. Is that going to pose a threat to your business round? So just like to spin around real quickly, 30 seconds or less. Paulo, are you worried about negative interest rates?
So I was talking to Tether CFO and CIO. They are prepared with the Tether current monetary base. I think what I'm gathering is that there won't be any problem in being resilient and be profitable even with negative interest rates. Also, Tether is a super lean company, has not many employees or contractors, so it won't be so difficult.
Chad, is this keeping you up at night, negative interest rates?
Well, I mean, I think negative interest rates should keep us all up at night, because I'm not sure how a capitalist system works if the time value of money is negative. It's like it just completely turns everything on its head. From a practical perspective, that it challenges all of our business models. We're all making interest, and now you're not making interest. We certainly think about this from the long term, so I don't think this changes anything for us tomorrow. If we live in a world of permanent negative interest rates, I think running a stablecoin business is going to be probably the least of all of our concerns, because I don't know where that ends. Certainly nowhere good.
I would add just one thing on this is, it seems highly likely that we are in an extended period of time where there's not sort of yield on cash, short-term cash as we think about it. if you have an arrangement where you have the flexibility to invest that more aggressively to generate yield, that's one thing. But I think that's really challenging if you want a stablecoin that people trust as a fully dollar-backed and liquid instrument. However, I think the bigger point here is our philosophy has always been that ultimately essentially the business model of storing money and moving money would just be commodity-free services on the internet. Just like it's free to store as much content as you want somewhere, it's free to send as much content as you want anywhere, it's free to communicate with anyone anywhere. The internet and the digitization of content, communications, and now money drives it to zero. So there really isn't a business model in payments in 5 or 10 years, at least not one where you're taking a cut or taking a transaction fee. And I don't believe there's going to be much of a business model in storing cash either. Financial organizations, people who are building business models around money and digital money, have to think more about what is the value they're providing as a utility to society, to businesses and others that doesn't involve extracting these fees, because those fees are going to zero.
Interesting. Yeah, it's going to be competitive out there. Another good audience question here. I guess someone's asking about the real world use cases of stablecoins. Now it's sort of a game for crypto traders, but in the real world, who's going to latch on to it first? Which industries, which people are going to see sort of adopting this in sort of a mainstream way? And once again, we're almost out of time. So let's go real quickly, starting with you, Chad.
Yeah, well, we're having these conversations right now. Lots of firms are starting to adopt stablecoin dollars. There's a huge amount of utility that can change, I think, the business models of payment firms, of technology firms, of banks. And they're all having this conversation, partly because Facebook and Libra have really changed the subject for them and made them have to focus on it. And partly because it's just a logical thing. If you're at zero interest rates, you're trying to think about how you can change your cost curves, how you can change your business models. And this really allows you to add a lot of functionality that doesn't exist with the way banking works now and the way money movement works now. And so I can tell you, I think in 6 months and 12 months, people are going to be very, very surprised at the names and the companies that are involved in the space compared to where we are right now. And that's why I think, there is a chance here to really change the financial system fundamentally by having dollar-backed stablecoins and other currency-backed stablecoins as well.
Interesting. Paulo, any names and companies you think are going to jump onto this sooner than later?
Well, we are seeing increasing interest for remittances and for traditional e-commerces that want to use a stablecoin payment system. Something that is sometimes we see our customers making the comparison between the use of stablecoin for handling e-commerce payments and the cost of rebates for credit cards, for example, that can vary from 1% to 30%. So, of course, everyone is happy in order to if they can save some money.
The hook is coming, the guitar hook. So you got about 10 seconds.
Do I get it?
You do. You got 10 seconds.
All right, 30 seconds. So
I'm going to start louder.
Yeah, all right, cool. We launched something called Circle Business Account last quarter. We're seeing very significant growth in businesses that have nothing to do with crypto. E-commerce businesses, B2B businesses, ad network businesses. It's really amazing. So on an average 10, 20 day period, now the majority of people who are signing up to use USDC in different ways have nothing to do with crypto or crypto trading. And so this transition is happening right now.
Yeah, banks, finance, it's really interesting. Gosh, we could have gone on for another half hour here. I want to thank Brian, yourself. I want to thank the panelists and thanks the audience, everyone. That was a really great panel. Thanks, guys. Over to you, Ryan.
Thank you.
Thank you, Ryan.
Thank you all. Right on time, keeping the ships running on time, chains running on time. Thank you. That was fantastic, guys.